February 2nd, 2024. I had a couple thoughts to start. First off, we had a measure move up. You can see we tried to get a wedge, 1, 2, 3, and we failed. So we ended up getting a measure move up of the wedge that's around where we reversed, which is also around 5,000, which is a pretty important magnet. We got close to it, but ended up failing. I assume we'll get there at some point. And I had a couple other thoughts on the daily chart coming into the day. It was a big, we had a bull bar here, and I thought the bulls who bought above this were going to be disappointed. So I was expecting some sort of disappointing follow through today. Obviously, we didn't end up getting it. We ended up getting a pretty strong bull bar, but usually buying above this kind of bar, you would expect disappointment. We also had two open gaps early in the day. And when you have two open gaps early in the day, you have to be thinking it could be a trend day. We had the one open gap here with this low, right? So the bears who sold with 12 high got trapped and were never let out. And then we had a more subtle open gap here with this. And it's easier to see on a line chart, but it's a body gap essentially. The breakout here, and then the bodies never overlapped. So if you look on a line chart, you can see we have an open gap right here, and then we have an open gap here. And it's easier, if you struggle to see those gaps, you can always just look at the line chart and see if you have an open gap. But whenever you have two open gaps early in the day, generally, at least one of them is an actual gap and one of them is a body gap. It really increases the chances of a trend day. And you can see two early open gaps. When you get two early open gaps, here's a bunch of examples. Trend day, trend day, trend day. This one is a very subtle open gap, but those are important to pay attention to. Trend day into trading range. So a lot of times you end up getting strong rallies when you get those open gaps. So really important to pay attention to them when you get them. Bear doji bar on bar one. So not that great. I thought we were probably going to trigger the high above yesterday and probably end up getting above yesterday's high and seeing what was there. Bear doji on bar one, not all that great. Inside bull bar on bar two. You can buy above two for a swing. It's actually, I actually have a tab on that. Inside bars as opening swings. And there's we have a couple of them. You can see inside bar 6, opening swing. So, this is an opening swing, less of a good example. And then today, obviously. So sometimes when you get an inside bar, it ends up being the low of the day. So inside bars as the opening swings are low probability, but every once in a while you can see like this, you end up getting a large trend day and you make your money. Bar 3, follow through for the bulls, but big tail on the bottom and tail on the top, so not as good as it could be. You can see bulls on 3 were more interested in buying a pullback of 2 than buying above 2, and they bought around the open of the day. More follow through for the bulls on 4, and we trigger above yesterday's high, which is important. And you can see we essentially just traded back up to this close. This was a reasonable buy the close bar, so it was reasonable to think that we were going to get a second leg up from it, and it might test the close. Trading below bar 4 on 5, it's essentially a double top with this, but it's not that good. If you're selling below 4, you have to be expecting something disappointing. It's really not a very good sell, and that's why you get bad follow through on 5. 2, 3, and 4 probably strong enough for its own second leg up, which you do get on 6, and then a double top on 7, but 7 really not all that good. It's a doji bar, so if you were a bear, you were hoping for a stronger sell signal bar, and you don't get it on 7. And you get bad follow through on 8. If you're selling below a bar like 7, it's low probability, and you want to see essentially a collapse. You want to see a giant bear bar, and you don't end up getting it on 8. So disappointing follow through. 9, a bull bar triggers the high 1 above 8. You could argue it's a high 2, 1, pullback 2. Either way, I don't think it's all that good to be buying here. This looks like a leg in a trading range, and like we're going to form some sort of wedge. Follow through for the bulls on 10, but again, big tails. So how good is this really? We'll probably get back to the high of the day. Generally on the daily chart, when you trigger a magnet and then you pull back, you go and try and trigger the magnet again with daily chart magnets. More follow through for the bulls on 11, but it's the best looking bull bar, and this is probably a leg in a trading range. So I think probably going to get a deep pullback here. Bulls, you can see after 2, they're more interested in buying the pullback. After 9, they even bought the pullback 9 during 10. So what do you think is going to happen when we get a big bull bar 11? Do you think bulls are going to buy above 11? Probably not. There's probably sellers up here, and bulls are going to buy a pullback of the bar. So you get disappointment, bar 12 for the bulls. Do you exit below? I don't know. I think if you bought above 11, you're probably willing to scale in. You're kind of signing up for this sort of thing. But it's notable that this channel is relatively tight. It looks kind of like a wedge, but it's a pretty tight channel. So we might end up continuing up. And we also haven't had a close below the moving average yet today, and we hadn't really had one for a while yesterday as well. So we're getting a tight bull channel and we're not going below the moving average. So it's reasonable to think we're going to start to rally here. And then you get 14. I think 14 is really important. 13 is a doji bar, and some bears would sell above 13 expecting that follow through. And then they see 14 and they think, that's not what I wanted to see. It's a good bull bar closing near its high, and maybe we're going to get a measured move up somewhere up here. So 14 is a swing trade and low probability that you're going to get the measured move up, but it's a reasonable thing to do. And considering that we haven't had a close below the moving average yet today, and for quite a few bars yesterday, it's possible that we end up getting it. And so what do bears do? Well, a lot of the bears who sold above this are just going to take their loss above 14, and that's why 15 gets so big. You can see the bears who bought above, or the bulls who bought above 14, were able to make 10 points pretty quickly on 15 and 16. But 15 is a breakout above a bull channel. You can see we have a tight channel from 1 to 12, channel line, these highs, and we're getting a breakout above it on 15. So probably going to, start to go sideways here. Reversal down on 16. Can you sell 16? I think it's a credible sell, but you have to understand what you're selling there. You're selling something hoping that there's a 60% chance you're going to get 2 legs sideways to down. And you did get 2 legs sideways to down. It's just sideways to down can mean sideways sometimes. If you're selling here, you're hoping that these gaps are going to close. But what have the bears done so far today? They haven't really made money anywhere. So it's less likely that that this is going to work. But I think it's still a credible sell. But when you get disappointing follow through on 17, a lot of those bears start buying back shorts, and that causes the market to race up during 18. 18, a bull bar triggering the high one above 17, but not all that great. I think the traders who bought here disappointed this. Maybe they scaled in and they might be exiting. And then you get another leg down 19, so that qualifies as 2 legs sideways down, so we really don't have to go lower here. Additionally, 18 was pretty strong, and a lot of times if 16 is going to work, you're going to just get a big follow-through bar on 17. So that's why a lot of those traders scalped out disappointed, because they didn't get the big follow-through bar they wanted on 17. 20, high 2, so high 1, 17 triggers, pullback, high 2, 20, but not all that great. You're buying high in a tight trading range, and bears might try to defend their stops. You can see we ran bear stops 21 at the top here, and then 22, a reversal attempt down. This is a final flag. It's a tight trading range, and we've had a few pushes up, so it's a final flag. But again, we haven't had a close below the moving average yet today, so it's really not all that good. And without having a close below the moving average yet today, it makes it less likely that we're going to end up getting any kind of reversal down. And the bears really haven't made much money, so it's really, again, not all that great to be selling. And same thing, if you're taking a low probability sell like you were on 17, you get disappointment 18, traders exit. Taking a low probability sell on 22, you get disappointing follow through on 23. A lot of those traders start buying back shorts and you get the rally. And then you see 24 closing on its high, or near its, above its midpoint, and it starts making you think that, sometimes in bull trends, you get 3 push pullbacks that are sideways to up. And it makes you think that, 16 to 23 might just be a 3 push pullback that looks more, with an upward slope, which is really strong for the bulls. And it's a breakout above, so maybe we get the measured move up, which I think we did immediately on 24. Not quite, but we do end up getting there. So 24, big bull bar by the close bar, because it's still a strong rally and we still have those open gaps that I mentioned. So good for the bulls, and more follow through. 25, still by the close, probably going at least a little bit higher, but the pullback could be sharp and deep. 24 is a spike, and so 25 through 29 ends up being the channel. I don't know, we might get a measure move up of the body, something like that. Maybe of the whole bar. I don't think we quite got the whole bar. But later we did. But what's important is, the close of 24, if you bought it, you were able to make 10 points. And that's a reasonable amount to make, especially considering you had 0 true risk. So you buy the close 24, you're never at a loss for even a second. So, pretty reasonable to start taking profits at 10 points, especially you can see, 26, 20, 25, 26, better bars, but shrinking bodies and increasing tail size, 27, 28, 29. So we're probably going to get a pullback pretty soon. So a lot of traders take profits at 10 points, and that causes 30. 30 probably going to get 2 legs sideways to down. We might have to get to the moving average. Disappointing follow through 31, a doji bar, and then a second leg down 32. If you sell 32, I don't think so. I think the downside, your limited downside is basically the moving average. So it's a scalp at best, and then you get disappointing follow through on 33, and a lot of traders are just going to buy back shorts. I don't think 32 is all that great of a sell. It's still a tight bull channel, and the bears really haven't made any money yet today, so it's hard to want to do that. Big bull bar 34. You can buy above 34. It's always in long. It's a bull bar closing near its high, and you're closer to the the channel line or the trend line than you are to the channel line. You can see here. So we're lower, and you're expecting a test of that high, so it's okay to buy. But it's a bigger bar, so bigger risk, and you might have to sit through a deeper pullback to the moving average. Traders are more interested in buying a pullback, which they do on 35, and then they bought below 35, thinking it's a bad low one, which it was during 36. And then you get a big outside up bar. But this is a really climactic bar. It's one of the better looking bull bars in the whole trend. And we're, 30 plus bars into the trend. So it's really, it's not all that great. 37, a reversal attempt down, a bear bar closing near its low. We're probably going to close the gap with the 29 high. We've had a lot of open gaps so far today. And at this point, we had this open gap. We had the earlier open gap, and we have this open gap. So some of these are probably going to close. I really doubt they're all going to stay open. And reversal down 37, bear bar, bulls will probably exit below. So some bulls buy the close 38, hoping that we're going to continue up. But 1, pullback 2, pullback 3, some sort of nested wedge, 1, 2, 3. And you end up getting a big surprise bar 39. 39 somewhat changes the character of the day. It's not, it's probably not really always in long anymore. It's really not all that great for anyone, and it closes a couple of those gaps. The problem for the bears is you don't really want to sell the close because the bull move was so strong, it's probably going to get a second leg up. But the pullback was steeper and deeper than the bulls wanted it to be on 39, so it's really not all that great of a buy the close bar either. Reversal up on 40, disappointing for bears who sold the close at 39 to see 40. So on 41, when we test back down towards that 39 close, you can see the bears who sold anywhere in here, disappointed in this, start exiting around break even, and that causes the rally on 41. We're probably, something to note is this is technically a gap bar, right? So we've been above the moving average for well over 20 bars, and then you get this bar closing below the low or closing below the moving average. So there will be bulls buying this, buying in here, trying to get back up to the high of the day. And that the 38 low is the spot where bulls would have bought below, expecting to make money, and they get surprised on 39. So they're probably going to scale in lower and expect to get out around break even. And you can see that they ended up doing that. Big bull bar 42, closing on basically on its high. It's a surprise, so it's probably good enough for a second leg, and you get follow through 43. So 42, 43, probably good enough for its own second leg. And you can see 44 touch the 38 low and reverse down. It's double top essentially for the bears and a lower high. When you got 39, it was reasonable to expect a lower high. I think in this point, I'll explain that in a minute, but bull bar 45 closing near its high and follow through 46, 47, but so many tails here that it's really just not all that good. I'd rather be flat. And again, 39, a big bear bar, so expecting a lower high. So some bears will be selling these closes, expecting a lower high here. And then a bear bar closing kind of near its low 48, but disappointing. And then doji follow through 49, so really not what you wanted. Bears were hoping to form some sort of, essentially trend line break 39, deep pullback, and then a major trend reversal. But 50 is really disappointing. Bears were hoping to get a better bar. And so what some bulls will do, this is one of the things that I like to do, is if I'm expecting that we were going to get some sort of lower high major trend reversal or something, I was kind of expecting a major trend reversal here at some point, but it started to look like we weren't going to get it. You ended up getting 1, 2, 3, 4, 5 straight bull closes. And so at a certain point, you probably just buy the market and hold and see what happens. Because essentially, if you get the reversal down that you're expecting, then you just get out below it and you sell. But sometimes what will happen is you never end up getting the reversal and it just keeps pulling back. And, the bears haven't really done a great job all day. So who's to say they're going to, end up getting that reversal? So some bulls buy above 50. You get follow through 51. It's a big bar, big risk, so not as good as it could be. Outside bar 52. Then you get an II, 53, 54, okay to buy the close, okay to buy above. Bulls, it's not all that great. We're probably going to find sellers up here. You would expect the bears who sold above this high to make money, but you can see we actually end up getting a breakout 55, but a big tail, so not as good as it could be. However, again, 6 straight bull bars, so okay to be long for sure. Inside bar 57, it's a triangle. 54, 55, or 53, 54 is an II, so it's also a triangle, which you can see we tested later in the day. Breakout 57, but again, a big tail, disappointing. 58, bear bar closing near its low. I wouldn't sell it, but I think it makes sense to get out of longs. The next magnet is 5,000. We're a little far away from it. So you can just get out and buy again above a bull bar closing near its high, 59. Doesn't trigger on 60, but you can buy again above 61, above 60 during 61. I did some dumb things today, for sure. I took this sell. I thought that we might close the gap with this high. I was expecting a trading range day, but I was kind of ignoring how strong this was. But one of the things I was happy with that I did today was I bought as 60 was trading down here, expecting that, it was one of those limit order trades that I thought the management was really easy, because if 60 closes on its low, you just get out below it and you'd be done with it. And you're probably not losing that much. Best case scenario, if the bear is 60 closes somewhere down here and you lose a little bit. But I bought expecting that the bulls were going to buy the 50% pullback and that we'd probably see some sort of rally. And I scalped out, and then I just bought again above 59 during 61. And 61, big bull bar closing near its high. It's good for the bulls. Something else I was expecting is I thought the bears who sold below 58 did a dumb thing, and I thought they would be stopped out. So I thought that buying, above 59.60 was okay, expecting that we were going to get up to here and stop those bears out, and we might try to make a run at 5,000. Follow through for the bulls on 62, but it's really not all that great. It's a disappointing bar. And then you get a bear bar closing near its low 63. I would just exit. 64, another attempt by the bulls, to essentially run bear stops above 63, but not all that good. And we started to just go really sideways here. And we were trying to hit 5,000, but we weren't quite able to. 66, bull bar closing near its high, but hard to want to buy, and it never triggers 67. You can see bulls are more interested in buying below bars and buying pullbacks of bars than they are in buying above the highs of bars. 69, it's a couple pushes up, 1, 2, 3. And it's failed breakout above this channel line. So, some traders might sell 69, but I think we're just pretty late in the day. And we touched the moving average. There are buyers at the moving average, rally up 72, and then, sell off into the end of the day, 70, 77, 78, whatever. 75, 76 probably traps most of the bears out. And so they're panicking back in, causing the big bar 78. And we're probably just trying to retest this high and maybe close these gaps eventually. My one thought on the daily chart right now is that I think we're definitely pretty overdone to the upside. And I think that, this tail was important. And I think that essentially a couple hours of sideways to down trading on Monday, and we're probably going to get a disappointing follow through bar for the bears who bought this close. So I'm expecting disappointment on Monday. We're probably at least going to get back to this high or this high and maybe all the way back down here. Probably not Monday down here, but I think we'll probably get back to this high maybe on Monday, depending on the gap, obviously. For stop orders, I thought 14 was good, betting on the breakout above the wedge. You could have bought the close 15, but pretty risky. Maybe you could sell below 16, I think, but you probably got to get out pretty quickly. Buy the close 24, 25, all the way through here, but kind of gets dangerous up here. You could buy above 34, but you probably got to find a way to get out during 39 with a profit. If you're buying above 34, you probably have to find a way to make money on the trade. I don't think you can hold and just get stopped out. Maybe you take a piece off at 5 points or during 36. You have more than 2 to 1 of your true risk. So okay to take a piece off. You could probably buy above 42, but there's probably some sort of reversal attempt coming. So hard to want to buy anywhere up here. You could probably buy the close 51, II, so you could buy above. You could buy the close of any of these bars. Like I mentioned, I bought a pullback. And yeah, on the weekly chart, good bar for the bulls, but, this is, again, very overdone. It's a tight channel, so we might keep going up, but, it's starting to get dangerous to be long. I think that we're pretty overdone, and bulls are going to start taking profits at some point. And like I mentioned on the monthly chart, we got, this disappointing bar. I really wouldn't be surprised if this ends up being a bear close. That's kind of my only thought on it. I would be kind of surprised if we get another big bull bar here. I wouldn't be surprised if this ends up being some sort of bear close. Bears need to start doing a better job pretty quickly. I'll change my mind pretty quickly if we don't start to go sideways to down, probably next week. But I think as of right now, it's reasonably likely that this is going to end up being a bear close, and we're probably going to start to go sideways here. I just think that this being 3-bar pullback is important. This all just looks like a trading range to me. So I think we're at least going to get back to this high, meaning I think this is going to be a disappointing close for the bulls, the same way this ended up disappointing the bulls. And yeah.